What's up, Bitcoin Bulletin fam? Get ready, because we're diving headfirst into the most explosive crypto news hitting the market right now. First up, we've got a jaw-dropping prediction that Bitcoin could triple by 2030, fueled by a massive catalyst you won't believe. Stick around to find out what's driving this incredible forecast. Then, brace yourselves as Donald Trump's potential takeover of the Fed could send shockwaves through crypto markets. What does this mean for your portfolio? We're breaking down the serious implications of this political shakeup on the future of Bitcoin and beyond. We're also uncovering how Bitcoin miners are navigating treacherous waters with innovative strategies to stay afloat amidst rising difficulty and fluctuating revenues. These unsung heroes are finding new ways to thrive, and you'll want to hear their secrets. And finally, the crypto market cap is back over $4 trillion, thanks to a surge in Bitcoin ETFs and institutional whales gobbling up Ether. Don't miss a second of this. Hit that subscribe button and ring the bell so you never miss an update. Bitcoin's meteoric rise, could it triple by 2030? In just over a decade and a half, Bitcoin has transformed from a digital curiosity to a $2.2 trillion asset, defying expectations and capturing the attention of Wall Street and Washington alike. But the journey is far from over. A bold prediction suggests Bitcoin could indeed triple in value by 2030, potentially reaching a staggering $333,000. What's the secret sauce behind this ambitious forecast? The key catalyst lies in the ever-growing U.S. debt burden, now nearing $40 trillion, and the relentless expansion of the global money supply. As fiat currencies face debasement, Bitcoin's inherent scarcity, with its fixed 21 million coin limit, presents a powerful hedge. More dollars chasing a limited supply of Bitcoin is a formula for significant price appreciation, outperforming traditional markets. While the ride won't be smooth, with volatility a constant companion, the long-term trend points towards a substantial increase in purchasing power. The community is buzzing with excitement, analyzing the potential impact of this prophecy on their investments. Could this debt crisis be the ultimate fuel for Bitcoin's ascent? Next, we'll delve into how political shifts in the U.S. could trigger a serious shockwave across all crypto markets, including Bitcoin. Trump's Fed Gambit, a crypto market earthquake. Donald Trump's outspoken criticism of the Federal Reserve and its chair, Jerome Powell, has sent ripples of uncertainty through the cryptocurrency and stock markets. With Trump reportedly armed with a secret weapon, a close ally predicts he will take the Fed over, a move that could fundamentally alter the global financial landscape and create significant volatility for Bitcoin and other digital assets. This isn't new. Trump has long been critical of the Fed's monetary policy, particularly its interest rate decisions. The tension escalated with Powell's past comments on inflation and subsequent rate hikes, which some saw as politically motivated. While the odds of Trump removing Powell have diminished, his continued meddling in the Fed's affairs poses a serious threat to its independence, according to market analysts. As the Fed is expected to cut interest rates, many bullish traders anticipate a crypto surge, but Trump's potential influence adds a massive layer of unpredictability. Will this political uncertainty lead to a crypto crash or a rally? Next, discover how Bitcoin miners are fighting back against tough market conditions with ingenious survival tactics. Bitcoin miners' resilience, thriving in stormy seas. Bitcoin miners are facing an uphill battle, with network difficulty hitting record highs and revenues shrinking, all while grappling with expensive hardware and electricity costs. The network's difficulty has now surpassed 136 trillion for the fifth consecutive increase, while hash price, a key revenue indicator, has dipped to its lowest point since June. This squeeze on profitability is amplified by September's lackluster price performance. Yet, leading mining operations like Everminer, Bitdeer, and CleanSpark are not just surviving, they're innovating. Companies are optimizing financial management, forging new partnerships with energy grids, and even exploring new computing markets like high-performance computing, HPC, and artificial intelligence, AI. CleanSpark, for instance, champions capital stewardship, self-funding operations, and strategically managing its Bitcoin treasury. Bitdeer is pursuing vertical integration to control its supply chain and energy generation. Diversifying operations across multiple jurisdictions is also a key strategy to mitigate policy and regulatory risks, as highlighted by Everminer's CEO. Furthermore, miners are redefining their role by becoming valuable partners to the energy grid, especially with the rise of renewables, helping to stabilize power systems. The battle for profitability is fierce, but these miners are proving their adaptability and strategic prowess. Can these innovative strategies secure the future of Bitcoin mining? Next, we'll look at the broader market as institutional money floods back in, pushing the crypto market cap past a major milestone. Crypto market cap surges past $4.01 T on ETF frenzy. The cryptocurrency market has reclaimed a significant milestone, soaring past $4.1 trillion in total capitalization, driven by a powerful resurgence of institutional interest. Spot Bitcoin ETFs have recorded their highest inflows in 2 months, with nearly $800 million in net purchases on a single Wednesday, signaling a renewed appetite for regulated crypto products. This influx of capital has directly fueled a bullish price movement for Bitcoin, which climbed from $110,000 to $115,000 in a single week. The confidence from professional investors is palpable, as these ETFs require actual Bitcoin purchases, directly impacting supply and demand dynamics. It's not just Bitcoin. Spot Ether ETFs also saw substantial inflows of over $230 million this week, reversing previous outflows. Adding to the bullish sentiment, major institutional player Bitmine significantly increased its ETH holdings, crossing the 2 million ETH threshold and continuing its accumulation. In total, institutions now hold nearly 10% of the circulating Ether supply, raising questions about future liquidity and demand, but also solidifying Ethereum's role as a foundational financial asset for large players. What does this institutional stampede mean for the long-term crypto landscape? Stay tuned for our lightning round recap and a full call to action to keep you connected with all things Bitcoin. All right, crypto crew, let's do a quick recap. Bitcoin is predicted to triple by 2030 thanks to a scarcity catalyst. Donald Trump's potential Fed control could shake up crypto markets big time. Bitcoin miners are getting creative to survive tough conditions, and institutional money is flooding back in, pushing the crypto market cap over $4 trillion. Don't miss any of the action. Smash that like button, subscribe for more, hit the notification bell, drop a comment with your thoughts, and follow us on all social platforms for the latest updates.